you don't want to be investing in high-cost hard rock in Australasia. You want to be investing in low-cost, long-life, strategic assets in North America that can feed into the Asian market.
The IRR is 21% post-tax. Anything over 20 is good for me. No one cares. And after 2.5 years of downward pressure on the share price, they're not listening anymore. So what are you going to do? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, do give us a thumbs up. It helps us to understand which companies we should be spending our time, money and effort on. And do leave your comments below. That helps us understand the sorts of questions you think we should be asking, how you think we've done, and of course what you think of the company. If you want to catch this as a podcast, an article or a transcription, you can get that on cruxinvestor.com. And of course for our Crux Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Peter Secker, CEO of Bacanora Lithium. They're listed here in London. They've also got two projects, one in Mexico, a very, very large lithium project indeed. And we talked through where they're at with that and how they're developing that. We talked about some of their partners financing that they have started to put in place and the roadmap through to production. They've got a second asset in Germany, probably will sit there in the corner looking to offload it in some way. So take a look in the description below at some of the other topics we discussed with Peter. I thought quite a useful discussion, certainly on some of the macro points. Anything interests you in particular, click on the number beside that topic. It's called a timestamp. I'll jump you through that part of the video. Otherwise, enjoy what Peter has to say. Peter, how are you doing, sir?
Very well, thank you, Matt. Good to be talking to you.
Yeah, fantastic. Well, thanks for coming on the show and telling us a little bit about your story. So where are you at the moment?
Currently in Soho, trying to work through the lockdown, enjoying the quiet for a change.
The quiet of Soho or the quiet of the lockdown?
Both.
It's a nice place to be. I used to live quite near you. I was around in Covent Garden and I had a very different experience. It's a very, very noisy place to live, it seemed.
And Soho is just about to, or just starting to open up. So a few more pubs open, a few more restaurants, a few more people.
Right.
But the last 100 days have been very quiet.
Well, okay. Enjoy it while it lasts.
I will.
Okay, so why don't we kick off? It's a new story to us, new story to people watching the show. So just give us that 1 minute overview and then we'll pick it up from there.
Okay, so we're focusing on the Sonora Lithium project in Mexico, very much demonstrating project economics. We've got strong economics from the deposit. We have a strong team of people, world-class, with a lot of lithium experience. And we have partners in Asia and in UK that are both focused on the technology side and the economic side and also the offtake side. So project people and partners.
Okay, so you're quite an advanced story, but I always like to get in the minds of the management teams, to understand who I'm buying into, what their capabilities are and relevant experiences. So you've been there about 6 years. The company's been going just a little bit longer than that. What did you guys set out to do back then, which would have been, pre the last sort of peak in the lithium market?
Well, originally we were looking for industrial minerals and more generic minerals than anything specific. And geologists, thankfully, driving from a work site to their camp, came across a strong outcrop. So an outcrop that stretched about 7 kilometers and finally worked out to be 100,000 hectares in size. I mean, you can compare that to 100,000 football fields in size. And a deposit that is 40 meters thick, 5 kilometers long. So they found the deposit, did some multi-element analysis, really looking for anything, and strong background lithium samples came back. So we moved our whole exploration focus from northern Mexico to western Mexico, and now Sonora is our key focus. And Sonora Lithium project has turned out to be a world-class deposit.
Okay, but so you found this by accident, stumbled across it, literally, and you thought, right, okay, so what can we do with this thing? So what do we understand about lithium? What do we understand about the lithium market? And where do we position ourselves? So what were the answers to those questions?
Well, it comes back to the project economics and the product itself. So lots of lithium in the world, there is no shortage of lithium. You have to demonstrate that you can produce a product that an off-taker wants, and you have to demonstrate you can produce it at a low point on the cost curve. So the first thing we did was raise some money in the London market from M&G and built a small pilot plant in Mexico. Nothing better than having your own plant, having your own team, and starting early. So built the plant, started producing samples, and sent those samples to Asia, mainly to Japan and China, which is where 95% of the world's lithium batteries are made.
You seem to be like skipping to quite an advanced stage in the process. Like, you stumbled across something and you said, we're going to be a lithium producer, right? That you went straight to that. You said, that's the right route. You weren't explorers, developers. You thought, we can produce this ourselves, even though there's a lot of lithium in the market.
Correct. And we had strong support from our shareholders to do that. So building the pilot plant was the best thing we did. We brought a team down from the US, people who'd made lithium before in very many parts of the world, and demonstrated that we could produce lithium on a cost competitive basis with the guys in South America, in Chile and Argentina, who lead the world in lithium production.
Okay, so tell me about that. So you're a bunch of explorers, you're going to get into production, you're building a plant, there's a bunch of different skill sets required. So how did you go from, we've discovered this, to putting the team together who are capable of building even a pilot plant?
Sure. So there's a lot of expertise in North America, mainly focused in North Carolina, which at one time was the world's biggest lithium producer. You have both FMC, now Livent, and Albemarle operating there. So we borrowed some people from that area, guys who built projects in North America and also in Argentina and Chile. And that became the core focus. Eric Carter leads that team. And between him and his operating group, over 130 years of lithium expertise. And very much focused on building a project that is competitive with the lowest cost producers. Not focusing on producing lithium, but focusing on producing a high quality product at the lowest end of the curve.
So what's your experience?
40 years in the mining industry, initially Australia, iron ore and gold, and then got involved in titanium very early on in the late 80s, early 90s. And titanium processing, sulfate processing is very similar to lithium sulfate processing. So had a bit of a background in lithium and titanium. Went to China, spent 15 years building gold and copper mines in China. And then in 2007, 8, got involved in lithium in North America, in Quebec, and built a lithium project for the Quebec government. Saw that project in 2013, knew of Bacanora, but didn't know much about it. Had known the previous chairman reasonably well, and he said, come down and have a look, see what we're doing in Mexico, see if you like it, see what you think about it, and give me an opinion. And very much went down, fell in love with both the country and the project, and have now been here almost 6 years.
It's been a tough 2.5 years, hasn't it?
It's been a tough, for the lithium market, it's been a very tough 2.5 years. Significant oversupply coming out of Australia. And the problem with Australia is lots of lithium, no question, but tend to be small resources with short reserve life and right at the top of the cost curve. So you've seen the Australians bring on a lot of new production, very expensive production, have flooded the market, and are now finding that production at the high end of the cost curve doesn't work when you have a price that's below your cost of production. And a lot of the Australians are now seeing that.
I would say it's also been a tough 2.5 years for your company.
2.5 years? I think it's...
Well, I'm looking at the share price.
Oh, building projects is never easy, Matt. That's there's lots of ups and downs. I mean, we tried the route of having strong strategic investors, mainly on the corporate side, mainly institutional side, to fund the project, and discovered that the market wanted us to have more technical support, wanted us to have more support from a lithium producer. And so 12 months ago, just over 12 months ago, we got involved with Ganfeng. They were looking to expand. Ganfeng, the second largest lithium producer in the world. They have projects in China and Australia and Argentina. They liked the deposit. They liked the fact that it was sitting at the lower end of the cost curve, the fact that it has a 300-year resource life, the fact that it produces a high-quality product. So Ganfeng came on board 12 months ago, both at the project level and at the BCN corporate level. and are now helping us and assisting us build the mine and bring it into production.
Okay, well, let's come on to the project in Mexico, because I want to come back to the macro component and how you're going to win. Okay, so why don't you kind of break it down? You've got a feasibility study. Why don't you kind of give us the highlights of the numbers?
So it's an open pit mining project. It's a shale type mineralization, so it's relatively soft. We don't have to drill or blast. So low operating costs in the mine, low stripping ratios. Bring it to the plant site, and the plant site is just a concentrator, and then a kiln, and then a hydromet lithium plant. So mining costs around $600 per ton. I'm talking in dollars per ton of lithium carbonate, and then concentrate to lithium sulfate. That's around another 1,500, and then you've got another back-end cost to produce a final product, which is a battery-grade lithium product that goes to the market, of around $1,500. So you're producing lithium carbonate for just over $4,000 a ton, which sits at the bottom of the curve. You're producing a 99.9% product, which is very much what the Asian battery manufacturers want. You're close to infrastructure, and you have a team of people in Mexico who've done it before.
Okay, so the numbers are okay, aren't they? I mean, the CAPEX not too much. The IRRs, whatever it is, 21% post-tax. Anything over 20 is good for me. No one cares, do they? The market's not reacting to those numbers or the fact you've got Ganfeng involved. Why not?
And that's why lithium is a long-term strategy. So we are in a economy where there is an oversupply coming out of Australia, and people are looking at that saying, who needs to bring on another lithium mine? You need to bring on a mine which has a long life and which is going to produce at $4,000 a ton for the next 300 years and will survive the ups and downs of the market. Doesn't matter whether you're a copper producer or a nickel producer or a cobalt producer. These markets cycle, and we want to be there for the long term. So our investors, whether it's Hanwha Corporation from Japan or whether it's Ganfeng or whether it's M&G, are looking for a long-term investment that will survive the ups and downs.
Okay. But for you, in terms of driving that share price, you need retail to get excited about lithium and what you're doing and the types of returns. And after 2.5 years of downward pressure on the share price, they're not listening anymore. So what are you going to do?
So they will start to listen once we have a development timetable. And we've told the market that by the end of this year, we will have engineering completed. We will have an investment decision Q1 next year. And the main focus for us is being in production by 2023. Forget 21, 22, because those are going to be hard times in the lithium market. We want to be in production by 2023 when both supply demand is in our favor and pricing is in our favor, and the world is looking for new supply.
Okay, so talk to me about you've got a lot of components in place. You've got some good partners, you've got some offtake agreements there, you've got a feasibility study there. And you've got some permits. So what's outstanding? What's missing in all of this?
So we have brought Ganfeng on stream, both as a partner and an investor. And Ganfeng have a technology that is proven throughout the world. They produce lithium in China and Australia and are building a plant in Argentina. So we will take their team out of Argentina when that's completed, and those guys will assist us to build a plant in Mexico. They will do the engineering, and they will give us a plant that is, in their view, world-class, and produce a product that is not just suitable for the current market, but is suitable for the market in 2025 or 2030. Because as battery chemistries change, as people look for more and more downstream, looking for more and more quality, then our deposit can produce a 99.9, a 99.995, and 99.999. So Ganfeng are looking for us to be their long-term lithium producer in the Americas.
So that's what they're doing. What are you doing?
We're very much following that strategy. We want to be a long-term producer in the Americas. We want to have a mine that is capable of going from 20,000 tons a year to 50,000 tons a year of being a world-class producer. And obviously building and getting cash flow going and then returning dividend to shareholders.
Yeah, but that all sounds quite ethereal to me. I want to know, so between now and when you start producing, what are you doing in terms of, whether it be refining the costs or getting additional permits in place or positioning yourself in the market or telling the story about, what are you going to do? What have you targeted? What have you or the board targeted yourself with doing?
So very much focused on the project in terms of building a team that will operate both a construction phase and an operating phase. We have a pilot plant in Mexico that has 40 people at the moment that will continue to operate, and that team will move on to the construction phase. So people are key to this. Technology we have from Ganfeng, and then we have strong partners in Mexico. Sonora government very much focused on an integrated lithium strategy. They want to mine lithium in Sonora. They want to have lithium produced for batteries in Sonora, and they want to have EVs made in Sonora. So support from the government. Permitting, as you say, is done. Engineering is 80% done. We want this to be in construction by Q1 2021.
Okay, and we're hearing stories from the silver space, experiencing problems in Mexico. Have you come across any issues at a state or federal level in terms of moving this forward?
Sonora is the largest mining state in Mexico, very strong mineral resources strategy, government very supportive. We are operating next door to Ford, which is the largest employer in Hermosillo, over 20,000 people. So no, we've had nothing but support from both the state and the federal government across the board.
Okay. You've got a project in Germany, that well-known mining jurisdiction, Germany. Why?
Originally, we had thought that we wanted to bisect the market, have a project that was focused on Europe and the European battery manufacturers, and obviously North America and the North American Asian manufacturers. We found out the hard way it's very difficult to run two projects. Sonora's world-class. Germany is not as strategic, not as financially beneficial to shareholders. So we have said that we will look to spin that out in the next 6 to 12 months. So it won't be a focus, we'll be a shareholder, but our focus is very much on the Sonora project and bringing it on stream by 2023.
Given that whole European ecosystem for the battery metals, EV thematic, are there any buyers? Would there be any buyers? You can spin it out, but do you mean sale or do you mean spin out?
We are looking to maintain an equity interest, so it's not going to be a total sale. We want to bring in a partner who will build it and develop it, bring in a management team. So we want to maintain an interest, but it doesn't want to be a management focus for Bacanora. We want to focus on a 300-year project that produces for $4,000 a ton.
When do you know what the cost of your money is going to be?
The cost of our money. So if you look at the project, call it a $400 million project for Sonora. We've already sorted out the debt financing that's coming from Red Kite. So 150 million of the financing is done from the debt side of things. Ganfeng at both the project level and the corporate level will invest 22.5% in the project and 30% in the corporate equity. So that's another $150 million. So, 3/4 of the project is financed. Then you have M&G sitting at 20%. You have Hanwha sitting at 5%. So the financing, while always a risk, is pretty much mitigated. It's more going to be a development project with the risk of the mine in Mexico.
But the debt is usually conditional on getting the equity in, and there's a relationship between the debt and the equity. Both sides want to understand what the other side's going to charge. So can you tell me a little bit more about those conversations? Because M&G aren't necessarily going to come in for a big wedge of cash. They're shareholders, but are they going to follow their money?
They've said they'll always follow their money. They started a 10% shareholding 5 years ago, increased that to 20%. So they've always been a strong shareholder. Hanwha is an off-taker. So they both have equity in the project and off-take and are committed. As I say, Ganfeng is a joint venture partner as well as an equity shareholder. So their $150 million will underpin the next range of investments.
Okay. Any idea, have you spoken about terms? Do you sort of understand, what the cost is going to be?
Cost of money will be determined at the time when we raise the money. And we're assuming that will come post the final engineering and a board decision Q1 2021.
Okay, so what's the message to your retail following? Is it sit and wait?
Follow the developments over the next, and now it's only 5 months. Basically in 5 months' time, we will have everything completed. Permitting is done, engineering will be done, team will be in place. And we'll tell shareholders the financing timetable. And yes, we want a construction of just under 2 years and being in production 2023.
So, and how compelling do you feel this story is for new people looking at companies like yourself? I mean, lithium, as you said, it's been hammered in the marketplace. It's been a very difficult time. Australia, it's pretty much a dirty word at the moment. So, how do you get new investors interested in your story versus the next story?
So there's only one lithium project in development at the moment. That's the Lithium Americas Ganfeng project in Argentina. That will be completed towards the end of this year. And just remember that name, Ganfeng, because Ganfeng are building in Argentina and will build their next project in Mexico, and we as the major shareholder will follow that joint venture strategy. So if you want to be involved in the next lithium project that gets built, it's going to be Bacanora. If you want to be involved in a world-class project that lasts 300 years, that's Bacanora. But if you more importantly want to be investing in a project that produces the highest quality product at the lower end of the cost curve, that's Bacanora. So you don't want to be investing in high-cost hard rock in Australasia. You want to be investing in low-cost, long-life, strategic assets in North America that can feed into the Asian market, because the Asian market still builds 95% of the world's lithium batteries.
Yeah, I mean, you spend a few pages talking about the macro story. So give us your overview of the timeline of the lithium recovery.
Well, lithium recovery, I don't have a crystal ball, but I would say that the pricing pressure is now coming off. You're starting to see increased EV sales out of China post-virus. You're starting to see increased sales out of the US, and obviously big investments by European governments in the, just call it the green energy space. So everybody talks about EVs driving the market. EV will be the base load, but it's really the renewable energy storage, the grid storage, the big battery storage that will be the cream on the cake. If you look at a car battery, typical size of a battery, 50 kilos of lithium, maybe 60 kilos of lithium. These big batteries, anything from 100 tons to 200 tons of lithium in these big lithium grid storage batteries. So yes, EV is underpinning demand, but renewable energy storage really pushing demand post 2023.
And have you got that's interesting to me, have you got a sense of the size of that market? Because you obviously got the VRFB proponents, and who would argue that longer term storage batteries are the way forward. So how do you see those two sitting alongside each other?
Well, at the moment, if you look at the space for lithium, and this is downstream lithium, probably 80% of the world's lithium goes into the EV market. And you call those portable batteries, no matter what they are, but they move around. The grid storage story is by far the more compelling. China has invested billions of dollars in onshore wind and onshore solar, and they have over 100 gigawatts of renewable energy in that space. You now have Germany saying they're going to invest 60 billion into the green energy story, and that will require energy storage. South Korea is saying 65 billion in the renewable energy storage. And then you had Mr. Biden, day before yesterday, saying he's going to invest $2 trillion in the green energy story over the next 5 years. So that's where lithium demand will be really pushed. So let's just assume that some $3 trillion is going to be spent in the next 5 years on renewable energy. You can generate as much energy as you want, 100 gigawatts, 200 gigawatts, but you have to store it. It's intermittent, but you need supply 24/7, and that's where storage batteries and lithium storage batteries come into play.
Interesting. Okay, we'll have to do a bit of digging on that. Hadn't really thought of it. Lithium as a player in that space. I'm not a meaningful player anyway. Brilliant, Peter. Thanks for running through that story. New to us. First time we've met or spoken. Appreciate you going through the story. You've got quite a few deliverables coming up in a very short space of time. I guess as they hit the market, you'll start to see whether people are paying attention or not.
No, the next 6 months will be very exciting. We want to be digging a hole in the ground in Sonora in 8 months' time. So yes, watch this space.
Beautiful. Thanks, Peter. Appreciate your time.
Thank you, Matt. Thank you.